Okay, so the next part, we go to the first part of this chapter. What is corporate finance? Kita kena kenal dulu corporate finance tu apa. So if you're talking about management accounting, it's about decision making, right? Same here for corporate finance, it's involved decision making, but in different ways lah. For financial accounting pula, dia punya apa? Dia punya recording tu quite different from the corporate finance. Kalau corporate finance ni kita lebih fokus more on the cash, physical cash flow. Kita nak tengok kat situ. Kita tak record dan kita tak concern sangat tentang apa cash that are going to be received. Kita nak cash flow yang kita ada to be used for the business operation. Okay. Right. So the corporate finance addresses the following three questions. So what are the questions that must be satisfied by the management team? So first is in what long life assets should the firm invest? That means what kind of investment you want to make for your company, right? And then once you have decided, or once you have identified what kind of asset you want to invest in or you want to buy for your business, okay, and then you have to decide the next question. You have to determine how are you going to finance that asset. Let's say macam kita lah, kalau kita dapat gaji, kita nak guna wang tu untuk beli apa, aset apa, and then ataupun kalau kita dah bekerja, kita plan nak beli rumah, so that is going to be your investment lah. You want to buy a house, so that is the first question that you are going to answer, right? That is the asset. The second question that you have to answer, okay, now you have decided to buy a new house, so then how are we going to finance this new house? So that is what the company should do lah. How can the firm raise cash for required capital expenditure ataupun for the investment? So is the company going to borrow money from the bank, or is the company going to issue shares or issue debentures in order to get fund from public? Okay, so that they can make use of that fund or cash to finance that new asset. Right, that is for the long term investment decision, okay, that involve the financing decision and also investment decision. For short term, right, the company also must consider the short term's cash flow availability. So they must make sure that the company has no liquidity problem in short term. So in other words, the company must make sure that the company is capable to meet the short term obligation. Okay, all right. So this is a diagram, right? To answer these three questions, we actually relates the question to the balance sheet. So I think a balance sheet nowadays is called as the what? Apa nama tu? Balance sheet sekarang dipanggil? Statement. Sorry? Company.
SOFI, Statement of Financial Position.
Financial position.
Yes, financial position. Is it financial position?
Yes.
Yes.
Yes, right, financial position. Okay, so so kalau kita tengok the left hand side, it's for asset, the right hand side is for liabilities and equity. So this balance sheets model here can be related to these questions. Alright, so look at the next slide. You can see that for the first questions, in what long life asset should the firms invest, it refers to the left hand side of the balance sheet. It's about assets, okay, the fixed assets or the investment in the long life assets. So it's either you want to invest in tangible asset, maybe you plan to, the company plan to buy a new house, a new building for the business, land, right? Or they want to invest in the R&D, okay? So they need to invest this, right? Either one, okay? And then for the second question, relates to the right hand side of your balance sheet. Okay, here you can see that, right? Current liabilities, this is for short term. So how should the firm raise funds for the selected investment? Okay, kalau kita decide to buy a new building tadi, okay, for the first question, then for the second question, the company has to ask whether to finance this asset using long-term debts or using equity. Okay, so the company must make a smart financing decision lah. Okay, how is it? Itu later on kita kena belajar nanti dalam next chapter. Alright. In short term, kita refer to the current asset. Sekarang kita tak panggil current asset kan? Kita panggil current asset lagi kan?
Masih.
Masih Okay. Kita panggil fixed asset, kita panggil long life asset kan? Okay.
Non-current asset.
Non-current asset. Okay. So current asset, right? In short terms, okay, we must make sure current asset, right, is greater than current liabilities in short term. So that, right, the short terms cash flow is always available for the short terms obligation. Okay. Right. Any questions? No? Right. So we go to the objectives of corporate financing. So in answering these three questions, right, in answering these three questions, right, the company's managers or financial managers, to be specific, must make sure that that decision will maximize the shareholders' wealth, okay, ataupun will maximize the firm's value. Okay, so this is the role of the financial managers. Okay, the financial managers must make sure the decision made or the answers for these three questions, okay, must maximize the firm's value and also maximize the shareholders' wealth. Right? So how the financial managers are going to maximize the shareholders' wealth? Okay. So the first one, the company's financial managers must make sure to select the value creating project, meaning that they must invest. This one refers to question number 1. So the financial managers must invest in the new asset or new project that provide the company high positive NPVs value. Okay. That means, let's say you have two options, for example, you have two choices whether to invest or to buy building A or building B. Okay, so you have to calculate the NPV of each new building. So if the NPVs of the first building, okay, is positive and the others NPVs, okay, is negative, then you will automatically reject the negative NPVs value project, and then you just accept the positive. Tapi if both projects are giving you positive NPVs amount or value, the company should select either one because of the limited sources of fund. Jadi dengan scarce resources yang ada, they have to make a choice. The financial managers will choose the higher NPVs positive value project. Okay, so this will, by selecting this positive NPVs project, okay, so the financial managers is actually maximize the firm's value and at the same time will maximize the shareholders' wealth. Okay. The second one, the financial managers in meeting the goal here, okay, maximizing the shareholders' wealth and maximizing the firm value. So the financial managers must make sure that they are making a smart investment and financing decision. How is it can be done? All right. How is it can be done? The financial managers must invest in the asset, like I said earlier, that can generate more cash or more fund, okay, or more income than the cost. Let's say the cost of that the new building is 1 million ringgit. You must make sure, right, the income that can be generated by this new asset in future ataupun for the few next year is more than its cost, right? Then you can make profit. So that's why NPV is positive, right? If the cash that you expected to generate, right, to be generated from this new asset less than its cost, then there will be what loss. So that's why NPV you negative. Awal lagi dah reject. Okay. So by selecting a positive NPVs project, that means you are making a smart investment decision, in other words. Okay, financial manager also must make a smart financing decision. That means the financial managers have to answer the second question just now, right? So if you have selected project A already, then how are we going to finance this project A? So you have to decide as the financial manager whether to sell the bond or you want to sell the stock. Or maybe you want to use a mixture of bonds and stock, right? You will choose any kind of the financing option here as long as that option give you maximum firm's value, right? If you think that using bond, if you calculate lah, you have to analyze dia ada calculation dia lah. If you found that by issuing bond will increase the firm's value, okay, then you will choose bond. If you calculate that or analyze that using stocks, okay, by issuing stocks in order to get the fund for financing the new asset just now, found that it will increase the firm's value, then you will choose the stocks financing. So it depends on your analysis of the bonds and stocks issuance, okay, to determine the smart financing decision. Okay, so as long as your decision, investment decision and financing decisions here increase the firm's value, right, then you are considered making a smart decision for your shareholders. Okay, right. So in maximizing the shareholders' wealth means dia punya what we call it, guideline to show you whether you have done your job properly in maximizing the shareholders' wealth is that you can see from the share price. If you see that by making your investment decision resulting the increase in share price, that means you have maximizing the firm's value. Okay, if you make the investment decision and financing decision makes your company become what profitable, and then you have more cash, okay, and excess cash to be used as dividend payment for your shareholders, then you are considered as making the good decisions for investment and financing, right? The company can therefore maximizing shareholders' wealth by a mix of share price increase. That means kalau share price increase from the share price of the company increase due to your investment and financing decision, that means you are maximizing the shareholders' wealth. And also from your smart investment decision and smart financing decision makes your company become profitable and resulting more cash generated or more income generated, and you have excess cash flow to be distributed to the shareholders as dividend. That means you are maximizing shareholders' wealth. Okay, right. Okay, here the way or methods of how to maximize the shareholders' value or shareholders' wealth. Not only via the smart investment and financing decision, but we do have other measurement to measure whether you have maximized the shareholders' value or not. right? First, you can look at your sales value and also production cost. If you are able to maximize the sales revenue and you are able to produce products or services for your customer at minimum cost or able to reduce the average cost, okay, production cost, then that means you able to increase the uh, or improve the financial performance of the company and also the cash flow of the company. So that means you are able to pay dividend and the share price of the company increase. Then kita dah boleh kata apa? The firm's value or shareholders value is maximized. And then if the companies are able to beat the competitions or become competitive where you can sell the product at low price, okay, at a with good quality, okay, and then you are able to beat your competitors where you can penetrate the market, okay, where you can get more revenues, okay, then you are able to increase the profit and you are able to improve the company's cash flow, and again you are maximizing the shareholders value. So other than that, not only in the, the quantitative, form, we can also maximize the shareholders value, right, by having a good corporate governance, where you have more transparent transactions, right, more transparent, recording system, and then you have a good integrity among your employees. Then this will also can promote a good or positive perceptions among the shareholders and this or public, okay, or to the public. Then you will be able to increase the share price of the company, right? Where if you have a good corporate governance, that means you can avoid the fraudulent cases, you can avoid any defaults for the obligation payment for your fund providers such as debt holders or debentures holders, and then also your managers become committed, right? And work with integrity and more transparent, then it gives a positive impact to the public and positive perceptions among the investors and shareholders. This will also make the share price of the company increase. So therefore, it will increase the or maximize the shareholders value, right? And then another thing is that if the company or financial managers of the company do the job properly by making sure that the level of debt is not too high, the leverage, that means the company is not rely heavily on debts, then this will make the company can perform the debts obligations to the holders smoothly, right? That means the company can avoid any financial distress and bankruptcy. So this also can give a good perception and positive impact, right? Positive signal to the shareholders or public. So this will increase the share price of the company, and again it can help to maximize the shareholders wealth as well. Okay, right. Any questions? No? Right, so this is an overview of the whole story here for maximizing the shareholders value. I think you can go through later on your own. Okay, then we proceed to the different stakeholders, right, with different objectives and possible conflicts among the stakeholders here. Okay, so for a firm, there is a range of stakeholders and they have their own objectives, and due to that, okay, there is a possibility of conflict between the stakeholders' objective here. Okay, right, so these are the range of the stakeholders and with their own objectives. So maybe we can look at one of these stakeholders. Look at the shareholders. Very obvious. This is very straightforward. If the company wants to raise funds or cash to finance the new project, the company issue shares. right? The companies issue shares, and then the shares will be purchased by the shareholders. Okay, and then what is it? The shareholders become the owner of the company, and the shareholders' objective is to what? To make sure their investment in this company give them something in return. For example, what is it? Increase in the share price, and also maybe paying dividends to the shareholders. For example, let's say if the company issue shares to the public at 2 ringgit and they purchase at that price, right? Purchase the share at that price of 2 ringgit, and then that buyer becomes the investors of the company or shareholders of the company. Okay, and then later, if the share price increase from 2 ringgit to 5 ringgit, so that means the shareholders can what? Earn a capital gain by selling that shares to other investors or to in the market at the price of 5 ringgit. So that's why increase in share price very important to the shareholders. So that's why financial managers must make sure whatever investment and financing decision they made will increase the price of the company stock. Okay, because the shareholders expect something in return in terms of capital gain or maybe in terms of dividend. Kalau dividend, that means, let's say, if the company use the fund provided by the shareholders, right, and they reinvest that money or invest that money in certain asset, and that asset provide more profit, and there will be more cash flow available for the shareholders, and that excess cash flow can be what? Distributed as dividends to the shareholders in future. So that is what the shareholders expect from the company. When we are talking about the stakeholders of customer, so the customer, definitely they are expecting the company sell the products or services at low price, and but with what? A good quality of the product, right? So this will satisfy the customer's requirement, okay, from the provisions of value for money of the products and services. Okay, they value the value for the money sebenarnya customer ni. Jadi kalau nak barang yang lebih berkualiti pada harga yang lebih rendah, itu stakeholders of customers objective. Kalau supplier, what is it? Supplier will expect the company will pay if we buy the what is it? Raw material from supplier on credit. Okay, that means supplier will expect the company to pay the supplier on time. Okay, itu. Okay, kalau directors and managers, so directors and managers adalah part of management teams of the company. So they also want to protect themselves, okay, against the what? Against the financial distress. They want to also to make sure that they will get their income, right, and they will get personal benefits or wealth. So it depends on the performance of the company. They must make sure that the company's performance increase from time to time. So that is the objective of the directors and managers stakeholders. Okay. Kalau kita tengok government, if you look at the government will expect what? Income in the forms of tax. Jadi they must make sure that this company is performing well or better from time to time, kan? So that they will get more income in the form of taxation every year will increase from time to time. Okay, kalau society also consider the community outside the company orang sekeliling tu tadi, also a stakeholder of the company, where their concerns is what? On issues such as environment. They want to make sure that the environment, right, is protected. Kalau dia keluarkan satu produk, make sure that products, the process of the product will not resulting the pollutions to the environment. Okay, in other words, they must make sure the company protect the environment against the pollution. Okay, so that is about the stakeholders. So as mentioned earlier, okay, as we have a wide range of stakeholders here with different objective, therefore there must be conflict between the objectives of these stakeholders. We take one example, one stakeholders group here, let's say the shareholders. Normally we know that shareholders wants the company to have a higher profit, right? So that the company will pay them what? Capital. So they pay them dividends, okay? Right, but this one will have a conflict with the employees stakeholders. Why is that? Definitely the employees, okay, and also maybe the top level require or wants higher wages. So when they are paid with higher wages, that means this is part of the cost of the company, right? The operating cost. This will make the profit of the company decline. So the shareholders will get less dividend. So that will be the conflict between these two groups of stakeholders. If you're talking about customer, like I said or mentioned earlier, customers' objective is to what? To buy a higher quality product or services but at lower price. Tapi managers and shareholders want higher profit. How is it? By selling the goods or services at higher price so that they can get higher or more income, right? So conflict lah dekat situ. Okay, kalau local people, meaning that the society wants little disruption to their life. Maknanya they don't want pollution. They want to make sure that they can live around the area there peaceful, right? Tapi dalam konflik dengan stakeholders yang mana? Management lah ataupun company tu sendiri, where the company's management wants the factory to be operated 24 hours. Jadi bunyi mungkin it's interrupt ataupun they make it's annoying to the local people kan. Dia tak boleh hidup dengan tenang lah, in other words, and then maybe it affects the environment, so they cannot stay at their home in a good condition, right? Dengan keadaan kesihatan yang environment yang tidak bagus yang boleh affect their health, kan? So that is the conflict between the stakeholders. We can have more than this actually, but this is just only the example. Okay. Any questions so far? No? Right. So I just proceed to the next part, which is about the agency relationship. Okay. So agency relationship. This is the relationship where relationship between one party, which is the principal, and the other party, which is the agent. So the principal will employ the agent, that is normally the agent is the managers or the management teams of the company, okay, to perform tasks on behalf of the principal, that is the shareholders. So shareholders adalah owner of the company, that so-called as principal. Management teams such as managers, right, directors, those are the agent of the company that will be acting on behalf of the principal. Okay, so in theory it's just easy to say lah kan, tapi in reality it's not easy because these two group of people, the principal and agents, have their own interests, okay, and have their own objectives, right? So as part of this relationship, the owner, okay, the principal must delegate decision-making authority to the management team. So we know that the shareholders is not always available in the company, right? Therefore, and they cannot do everything, okay, for the company. So that's why the owner of this company, that is the principal, the shareholders have to delegate the decision-making authority. Okay, so that means the managers will have authority to make decision. But then the managers or management team must make the decision in the best interest of the shareholders. They cannot make the decision for themselves only or ataupun for their self-interest. Okay, right? If they make the decisions for the company, but for the self-interest, okay, this will create problems that so-called as agency problems, or in other words, it will create a conflict of interest between principal and the agent. Okay, right. So once we have agency relationships, okay, this will create the conflict of interest between the managers and the shareholders, or between management team and the shareholders, the owner of the company. So this conflict of interest, right, must be resolved lah, okay, so that the company's value will increase. Kalau tak, okay, it will give a negative impact. Okay, so this will leads to reduce in the share price of the company, and then firm's value akan jatuh, so the shareholders wealth pun akan decline. Alright, so this is an overview ataupun the hypothetical organization chart. You can see here, right, the top one is the BOD directors, okay, followed by the CEO, CFO, we have treasurer, controller. So the management team here, semua ni lah termasuk ni. So they must be acting in the best interest of the shareholders. Why is that? Because the shareholders are the one who provide fund to the company, right, to run the business. Kalau tak ada fund daripada shareholders tu tadi, maybe, right, it will have no money or insufficient cash to run the business. Okay, right, and then so this is what I mentioned just now relating to the conflict, possible conflict between the principal and agent. So in the relationship of principal and agent, there is a possibility of a conflict of interest between these two people, right? Such conflict is called agency problem. So this is what I mentioned just now or explained earlier. So there are factors that makes the managers or makes the people in this agency relationship to create the agency problems or that contribute to agency problems. What are the factors? The first one may be because of the moral hazard, where the managers incentive to obtain benefit in kinds is higher when he has no shares in company. That means the company managers receive benefits more than they should receive. Okay, maksudnya lebih kuah daripada sudu, something like that lah, right? And then the other one is effort level. So it refers to the where the managers and the shareholders are the same people, the same person. That means dialah fund provider, dialah owner of the company, dialah juga yang run the business, that is the manager. Jadi in that case, they will tend to become lazy or to work less harder than they should have to work, okay, for the company. That is why it create agency problem. Okay, and then another thing is that maybe earning retention, where the managers of the company prefer to keep the money or to grow the company here and increase the sales turnover, okay, and assets rather than to increase the return to the company's shareholder. That means the company's managers prefer to make money for the company, but they don't want to return that cash to the shareholders in the form of dividend. Okay, or maybe earnings retention here, maybe the company do not want to reinvest the excess cash for the investment, right, to get more income for their business, right, for the company. So they prefer earning retention. So this will make the cash be apa? This is what we call hoarding. Hoarding, that means there is unproductive retentions of money, where the managers did not use that money for the sake of the companies and also for the sake of shareholders. Okay, because actually the companies have two options to make use of the excess money retention, the earnings retention ataupun earnings excess earnings. It's either to pay that excess cash flow or the excess earning to shareholders as the dividend, or they just reinvest that money. But then the agency problem, there is a conflict can be occurred when the managers keep that money instead of distributing and reinvesting it. Right. Another one is risk aversion. Maybe the managers refuse or reluctant to invest the company's money in a higher risk project, right, to protect their job, because they afraid of this new project turn out to be what um, to be a loss to the company. Jadi it will affect their income, it will affect their career, okay, in future. Jadi they want to avoid those, so therefore managers prefer to invest in, to keep the money or to invest in low risk investment, because we believe that if we invest in the high risk project, definitely the returns from that higher risk project is what higher kan, or more. Okay. Right. The next one is time horizon. So this is another things that create agency problem, where the shareholders, conflict between managers and shareholders, where the shareholders prefer long-term financial prospects, okay, investment, okay, from the company, but the managers only interested in the short-term investment, okay. So that create the conflict lah. Seorang prefer long-term investment, financial prospect, another one prefer short-term financial prospect, okay. Alright. The next question that we need to ask is what the agency relationship here has resulted in the conflict of interest between principal and agent, and these are the factors. So the question here is, how are we going to resolve this conflict of interest, or how are we going to counter this agency problem? So there are ways to resolve this agency cost or this agency problem. Okay, so basically we go to the first part here. What is agency cost? So agency cost are the cost or money that the shareholders has to incur or has to spend, okay, when the professional managers run their companies. That means they want the shareholder have to spend money, okay, to make sure that the professional managers run the business or run the company in the best interest of the shareholders. They have to spend. Nothing is free in the world. Jadi they can, in order to make sure that these professional managers will be acting in the best interest of the shareholders, and also become motivated to work for the company and become what more energetic, and become to work harder for the sake of the companies, right? Then the shareholders must spend for those mechanism ataupun those things. Right. So the cost of resolving the conflict of interest between managers and shareholders are called agency cost. So the money that you spend as the shareholders, the money that the shareholders spend to make sure that the professional managers run the company in the best interest of these shareholders is called as agency cost. Okay. Right. This is the situation where the agency costs do not exist if the owner and the managers are the same individual. Like I said earlier lah, yang ini tadi kita sebut, okay, the effort level tadi, kan? Di mana managers and shareholders adalah orang yang sama, jadi they become, lazy, become not interested to work in the best interest of the company. Okay, sebab dia tahu company dia kan, jadi dia boleh buat suka hati dia. Jadi it will not create any agency cost. Dia tak ada apa benda yang dia nak resolve kan. So do not exist if the owner and managers are the same individual. And then agency cost will increase, right? If the shareholders are not also directors of the companies, and then the the agency costs are potentially very high in the large company. Okay, all right. So the agency costs can be segregated into direct and indirect. Okay, it can be direct agency cost and it can be indirect agency cost. So for direct agency cost, this is the cost that the shareholders have to spend. Okay, this one can be quantified in RM lah. We can see the money that physically go out, right, from the company to be spent in order to make sure that the managers will be performing well and in the best interest of the company, right? How is it? The shareholders have to hire the external auditor or maybe have to hire external consultants to prepare the accounts, and then to make sure that the prepared accounts is properly done and full of transparency and with full integrity, then the shareholders have to hire the external auditor. So the external auditor must be paid the audit fees kan. Jadi semua yang dibayar tadi untuk external consultant ke external auditor ke adalah part of the agency cost. Okay, another way to make sure that the managers will be performing the best interest, right, and become motivated to work in the best interest of the company by providing the what or by introducing the manager reward scheme. Okay, this will make them to work harder so that they can get the rewards such as what stock options, ataupun rewards such as bonuses. Okay, if they perform well this year, right, or in future, they will be given a rewards in the form of stock option or maybe bonuses, okay, or increment in their salary, okay. And then the next one, to monitor the managers' activities or performance by implementing what is it contract, okay, by establishing a contract, a set of contract between shareholders and managers. So they make a clausa or a clause, okay, or terms in the contract and what should be done by the managers, what shouldn't be done by the managers and also shareholders. Okay, so to establish a set of contract also you need to pay fees to the legal firm, right? Okay, and then another one you have to pay for hiring a non-executive directors as a member of the board, which is more independent. So by having these non-executive directors, therefore you can um, make sure that the managers will be performing and working in the sake for the sake of the company. Right. The next one, indirect agency cost. Right. This is where we refer to the cost of loss opportunity. Okay, opportunity to make business. This loss opportunity to make business with supplier and also customer. Okay, when we have agency problem, maybe it gives negative impact to the firm's value and the share price of the company declines. So they will give a negative signal to the customer and also negative signal to the supplier to deal with our company. Okay, so this is a summary of control mechanism, right, that can be used or can be undertaken or can be executed by the shareholders, okay, in order to reduce the agency problem. So this is what I mentioned earlier. You can establish a set of contract, but you have to spend for this contract where you have to pay to the legal fees. And then the second one, maybe you can provide or you can introduce the managerial reward scheme by giving bonuses or by giving stock options plan, okay, to the managers, okay, if they performs better than the previous period. Okay, the next one, you can have your income statement to be audited by hiring the external auditor, but this is again not free. You have to spend the money. So cost that you have to spend for this four ni adalah kita panggil agency cost, and this one is basically a direct agency cost because it involves a quantitative amount in RM. Okay, same things here. Okay, right. Right. However, the control mechanism that we execute here, that can be executed by the shareholders, cannot be used to eliminate totally the agency problem. We can only minimize the agency problem. Okay. Why is that? Reason is that maybe we are dealing with human being. Sebab human memang akan subject to apa judgment, right? Let's say if the company has excess fund, so kita sebagai manusia nampak duit banyak pun kita akan rasa apa, dah macam-macam dah dekat fikiran to make use of this money, right? So when we are dealing with human, I mean it's hard to shareholders to eliminate totally the bad behavior of the managers, right? We can only minimize it to the minimum level. At least we can control, walaupun not totally. Okay, so this is the sources of information that we get from your textbook. Okay, any questions? No?
No.
Alright, so this is the first chapter, right? You can see this is just an overview for the whole course of MAF 603. Cuma dekat sini kita tak go in detail. Kalau kita go through this part, ini dah kita masuk capital structure dekat sini. Okay, dekat sini kita dah masuk topik capital structure and also cost of capital. Alright, dekat sini kita dah masuk untuk mergers and acquisition because it's parts of the investment, right? Dalam ni ada investment, right? As part of the non-current assets of the company. Cuma kita tak cerita in detail. Yang ini hanya overview sahaja. Okay, for the purpose of your test and your test, okay. Okay, so we normally ask the students about this one, Okay, biasa soalan akan ditanya tentang the what is it? The 3 questions that must be satisfied or addressed here by the financial managers, and then what kind of this smart investment decisions and financing decision that the financial manager should do, ataupun ditanya semua ni. Okay, how to maximize the shareholders wealth. Okay, and then they will ask you, okay, about the stakeholders conflict, and then about the agency theory, okay, right, agency problems, agency cost, itu semua memang biasa ditanya dalam soalan test. Okay, sama ada directly or indirectly. Sometimes they ask you about control mechanism, so that means to reduce the agency problem, so you can straight away go to the control mechanism, and then sometimes the question will ask you about agency cost, so that means you have to explain the points of the agency cost. All right. Any questions? No? All right.
No.
So since you didn't have any questions, okay, I think that's all for today. All right. So I hope it's enough for you, okay, to understand. But if you have a weak information regarding this topic, you can let me know later on. Okay. Right, if that is the case, thank you for your attention. Thank you for your time. And kita sudahi surah the class dengan surah wal as and tasbih kifayah. Okay. Assalamualaikum. Thank you.
Thank you, madam.
Thank you, madam.
Madam.
Thank you, madam.
Thank you, madam.
Welcome.
Thank you, madam.
Thank you, madam.
Dah habis top belah.
Gentle lah.
Dah habis belah.
Serius lah. Aduh.
Kau buat apa?
Aku buat apa?
Kau seorang ni?
Kat rumah aku seorang lah ni. Tapi ada orang ni.
Ada penyewa kan? Ada
yang-
naik motor injection tu. Itu kau kena balik je.
Kau tahu
Ni,
kau sekarang ni selari ni. Dengan tu.
Benda?
Tempoh.
Aku Kelang kan dah awal. Kelang dah minggu lepas dah start lah.
Lepas tu
Betul ni.
yang baru
Ni sambung lah dengan sambung dengan yang baru ni semalam punya keluar ni.
Sampai apa? 2 minggu kan?
2 minggu bawah. Sampai ujung bulan 10 lah ni.
2 minggu. Mana lah ujung?
Ya, ujung lah.
8 lah.
Ujung lah tu. Hang ni 2 hari keluar lah.
So kalau tak tahu lah kalau kes menurun okey kot. Asal kau nak balik?
Apa dia? Dah awal-awal dah kena macam mana nak balik boh.
Tak, asal nak balik? Saya lepas tak balik pun.
Tak ada aku tak ada nak balik aku tanya je.
Kau duduk rumah kan.
Duduk rumah. Tapi tu lah, duduk rumah macam kau kata lah.
Ya dah. Tak boleh dah aku. Aku duduk rumah tak bangun awal tu. Kalau duduk sini boleh bangun lagi.
Ya, duduk rumah. TV lah, apalah.
Ya dah. Tapi yang aku elak dengan awal-awal tu.
Okay lah. Tu perform lah saya lepas tak?
Sentuh je lah.
Yo.
Okay.
Okay. Gerak. Bye.
Okay.